Can you hear me at all?
Okay, good. I can hear you now. Yes, good.
All right. So I just saw you did, Michael did a very quick introduction of yours. Maybe please have you introduce yourself briefly too.
Absolutely. So my name is Obinna Ukwuani. I am the Chief Digital Officer at Bank of Kigali. I'm the Rwanda's largest commercial bank. I run a division called the Data Factory. We build digital financial services in-house. So things like mobile banking and an in-house product, agency banking, USSD, internet banking for retail and corporate. So even micro lending, we're like R&D shop within a larger institution, and we're part of the bank's digital and cultural transformation. Yes.
Region and one of my favorite countries in the world, especially given the kind of power women have been given in the region. Yeah. All right. So let me straight jump into the questions that I've been meaning to ask you. Right now, Obinna, first of all, is that an American accent I detect?
That's right. I'm American by birth, born and raised in Washington, D.C., and I moved to the continent in 2015.
Very nice. Wonderful. Okay. Now, Obinna, so when it comes to banking, right, customers actually feel that their bank's performance falls short on their expectations. All right. Speaking as a customer myself, right, customers expect the digital banking products to solve their problems because especially with the COVID-19 pandemic, right, post which how things look is a little different, or even way before that. I remember as a kid, going to the bank with my father and writing like a slip, filling a challan to deposit or to withdraw. From there, we are now in the generation of TikTok, where the screen bearability is reduced to 30 seconds, like you push, and with that, our expectations, right, are at its peak. As a end user, what I want is, first of all, things to go like that, correct? And secondly, what I also expect is, even if things are going really quick, right, it needs to be with utmost customer satisfaction. Because in my 30 seconds, if you don't serve me well, there are 10 other banks waiting in line for me to serve, right? So what do you think is a good strategy to achieve this and retain your customers or bring new on board?
Yeah, that's a great question. So I definitely agree. If one bank doesn't serve you well, there's a line of banks waiting to serve the customer. My position is that it's a little bit more difficult than that. Banking is very sticky. People choose their banks for different reasons. Maybe it was inherited. Your parents use this bank. Your first account was opened in the bank because it was your parents' bank. You've grown up with that bank, and you never thought to change it. My relationship with my U.S. bank, Bank of America, is similar, right? That's the bank my parents were using, so I used it, right? But now, as banking is very digital, you can just transfer money from one app to the next, and that's it. You're bank differently. So there needs to be some sort of stickiness. And I think the universe of banking products, from for us, we're a bank, we're a group, right? So we have an insurance company, we have BK Capital that does investments, we have BK Tech, which does non-banking technology products, and we have the bank. So we're able to offer a suite of different products for customers. So a customer might have insured his vehicle with us, they might have a mortgage with us. So for different reasons, and because of the consumption of various products, the customer relationship is quite sticky. Now, we don't want to depend on that stickiness, right? Like you said, we want utmost customer satisfaction. And you're right, things are digitizing quickly, right? So I think, updating, part of my job, in fact, my main job when I joined the bank about 2.5 years ago, was to modernize our channels and make sure that they were up to standard with what customers can expect to get regionally and also globally. We've moved beyond static applications that don't give you information, right? the thesis, or one of the driving theses of our new channel, is that you should have all the information about your financial life at your fingertips, right? You shouldn't have to search to find the last transaction that you did, right? Every time you open the app, it should feel like you're getting a pulse of your financial life, right? You should know how much money you spent this month. You should know how much money you spent last month. You should be able to budget. You should be able to track your spending, your finances, and your savings. Eventually, you should be able to track your investments as well, since it's within a group on that one app. Transactions should give you enough information, right? Now, on the back, things can be so messy. It's like spaghetti architecture largely, both within the bank, outside of the bank. If you take interbank transfers or SWIFT transfers as an example, interbank transfers, it leaves our core banking system, goes to the central bank's core banking system, goes to the recipient bank's core banking system, back to the central bank, back to ours. Every system is different softwares, different architectures, different platforms, different OSs, everything. And we have to, build applications that can kind of traverse that entire spaghetti architecture, right? But the customer shouldn't know that, right? So many things can go wrong, so many points of failure. You can submit the transaction, maybe BNR server is down, it doesn't get to BNR. Or maybe it goes to BNR, gets to the other bank, server's down, doesn't get there, we don't get the feedback. So we have to design journeys that give the customer all the data that they need. So when you initiate a transaction, we tell you transaction has been received. We don't say success. We say received, because we know if we say success, the customer's going to think, okay, great, my money is gone, person's received it, whatever, right? We have to be careful even with the language that we use. We have different states. So, okay, it's been sent. Okay, now it's pending. We tell you why it's pending. And only when we've confirmed that the money has reached its destination can we confirm, right? So we have to kind of break down these journeys and then give the information to the customer so that we can improve their experience, but also make sure that they're not calling customer experience, the contact center, for things that I think they should have been able to get on the app.
Yeah,
and
because I'd like to track everything on the app, right?
That's right. So if you send a transaction and you're wondering what's happened, you shouldn't have to call the branch. You shouldn't have to go in and see someone. You just open the app. All the information about that transaction is right there at your fingertips, and you know everything you need to know, right? In fact, if you still insist on calling the contact center, you have so much more information at your fingertips. So now that exchange is so much more productive and doesn't take as much time, is not as frustrating. The person can just ask, okay, what's the transaction ID? What's the transaction status? They check really quickly, 30 seconds, boom, you've been served. So these are some of the things that inform, I guess our product and UX strategy, right? And I also think from a structural perspective, right? I think banks need to, and I know this is a debate that's ongoing. Banks need to build capacity in-house. That's what I truly believe. I think, every company, whether you're a bank or you sell milk, they're all digitizing, right? Every company is going to be a technology company sooner rather than later. And, of course, there's so many different service providers that allow you to white label their solutions. And there's nothing wrong with that, of course, but there's no way those banks that rely on third parties for most of their customer experience can be competitive, because you have globally banks like Nubank and Revolut and Monzo that are digitally native, and they're doing everything internally from their core banking system down to the application, down to the card management systems, branchless from the beginning. And when you really look at them and study how they operate, I see a world where companies like that, these new financial technology companies like Nubank and Revolut, I see them becoming like the Googles and the Facebooks and
Absolutely.
And the Amazons. In the tech world, you have maybe 7 big companies and everyone else is a tiny player. I think that's where banking is headed. And I think if you want to position yourself to be a big player, especially when it comes to retail and SMEs, you need to have that internal capacity. So, between that and then, once you have the capacity, how you direct that capacity to solve customer problems with the right product approach and the right UX, I think these things together can help us achieve a really, really good customer experience.
Wonderful. Well, like you said, neobanks, fintechs these days, uh, like the Microsofts and Googles, are kind of you know uh, evolving that way as well. And I think one of the discussions today was about are fintechs a threat to banks? And the speaker got so passionate about it. It was like, yes, of course they're a huge threat, because if you do not evolve, you're just there. And if you are there, you're actually not really there, right? Because like, I don't know if you know, about 5 years ago, Ghana did like the Ministry of Finance and the Central Bank of Ghana did a whitewash of the banking sector, right? As a result of which a lot of banks were shut down. They were asked to have a minimum, working capital of certain amount and certain infrastructure in place. As a result of which some banks ended up merging, some banks ended up shutting down. And that actually gives room for development rather than, you can't live under the cave whilst people are, taking flying taxis, right? Moving on, the next question I have for you, that was one thing, and something else I did make a note of. However, I have another question for you, and that is, now, again, several non-financial institutions, right, fintechs or several organizations offer services very similar to what digital banking is expected today. Would you, like I said, this was a question to a previous speaker. Would you consider them a threat to banking as well? And
yeah. Mm-hmm.
Okay, so if it's a yes,
no, go ahead. Go finish your question. Go
okay, so I was actually thinking you would say a yes because I barely got a no for this answer. All right, and I'll tell you, a no I received very confidently this morning was from the managing director of Standard Chartered. Now, why was there a very were several fintechs by themselves, right? They've taken over a lot of fintechs, number one. Number two, what they've also done is they've started something called SC Ventures that basically acquires new businesses, invests in potential, businesses. So basically, they are very, very safe to say, no, they're not a threat because they're already working in the opposite function as well. That I was asking them if that is a threat. But you tell me, do you think fintechs are a threat to banking?
Yeah, I'm gonna. I love this question, and my answer is yes and no. And let me explain it. I know that's probably disappointing. You probably want a yes or a no, but
no.
And
honestly
I like what you said
speaking,
about
after one entire day of talking to experts, my answer has also become yes and no. But go ahead. I want to hear your opinion.
So my answer is yes and no, and it's qualified because I think it really depends on the leadership of the bank and its strategy, right? First, if you have to consider what a bank is, right? A bank offers a basket of services, right? You store the money of the customer, it's custody. You invest the money of the customer, savings accounts, interests, and maybe if you have a group structure, you have a way of getting them into index funds and all of that, retirements, whatever. And then banks allow people to spend money, so transfers, bill payments in Africa, cards, Apple Pay, etc. Right? So it's a basket of services, and of course, there's lending. Banks are financiers, and you need to look across the entire spectrum of banking products before you answer this question. Right? Fintechs tend to come from the consumer angle, right? This is custody, investments, and payments, right? You don't have fintechs that are coming out writing billion-dollar checks to finance infrastructure projects. You just don't, right? Now, to make that example, more real for the audience, take a look at Nigeria, for instance. You have there's one company called Kuda Bank. It's a new digital bank.
Yes, Kuda, yeah.
It has the highest valuation of all digital banks in Nigeria right now. Right, they've raised a lot of money. I think its last valuation was close to $500 million. Right, now let's take that $500 million as a valuation, and then you take a look at the incumbents. Right, banks like say Zenith Bank, which I think is number one bank or it's either Zenith Bank or UBA.
UBA, yeah.
Zenith Bank or UBA or Access, the tier one banks in Nigeria. None of these banks have a valuation higher than say 300, I think between 300 million and 600 million, right?
Right.
So their valuations have already been surpassed by these incumbents that joined in the last 3-4 years, right?
And these are organizations that have been existing for over decades.
That's correct. But I think it's misleading, because I think if anyone is coming at this question saying, but these companies are being, they're worth $1 billion, they're worth $2 billion, I think that's the wrong metric, right? Because in Nigeria, these same banks whose valuations are in the $500 million range, right? They're making $250 million profit after tax on an annual basis. So with their profits in 1 year alone, they could buy the biggest fintechs in Nigeria, right? And I think this is a point that must be noted. And where are they making their money? It's mostly on interest, on loans. In the end, if you're a bank, you must lend, period. And fintechs come in with their, with customer acquisition strategies, free transfers, free this, free that, pay this person, P2P, all of it is sexy, right? But in the end, this is such a marginal business. It's a marginal business. I think that kind of business, transaction basis, but probably better left to the Stripes and the Paystacks and the Flutterwaves of the world. I think to be a bank, you need a diverse basket of products, and one of those products must be lending. And fintechs hoping to compete with banks must grow their lending book. Otherwise, there's no discussion, right? And I think lending and running a good bank, right, that does lending, that does treasury services, right, running a good bank is as hard, if not harder, than running a fintech. And it's very unlikely, right? And this is one of the reasons why people think banks can't get technology right? Because it's very unlikely to get leadership that understands both things. I run a good bank, I'm good at technology, right? I think that's a new breed of leaders, and they exist. I think you have examples like Starling Bank in the UK, a big acquisition that I followed last year. They acquired a mortgage bank. Now, I will take a bet that in the next 10 years, Starling Bank is going to be one of the most fundamentally strong digital banks out there. Another bank is Nubank out of Brazil. The founder has a finance background, so I do anticipate. And lending was also one of the pillars they were built on. They built that business on credit cards. They made credit cards.
You've heard Anne Boden speak, yeah?
I have.
Yeah.
I have.
Okay.
And I read their S1. I read everything, and I'm a huge fan of their
work.
Yes.
The way you're saying it, I actually kind of, felt like I'm listening to Anne herself, because I've done a fireside chat with her, and the perception is actually pretty similar to that of yours, right?
Yes.
Okay, go ahead.
Yes, and I think they're spot on, right? I mean, Nubank built, their backbone is lending. They're the ones that that democratized credit cards in Latin America, and that's why they have their success, and that's why they IPO'd. And it's one of the more successful tech IPOs of recent history. Their share price has been fairly competitive, and I expect it to be much higher years from now. And I also own shares in companies like Bank of America, and they paid. So I expect Nubank to be an example of what a next generation bank is going to look like. So yes, they're a threat if the bank has the wrong strategy. No, they're not a threat if fintechs cannot get lending rights. And another point that's worth mentioning about the threat, because banks need to lend, you need assets on your balance sheet, or liabilities in this case. You need deposits. You need to maintain the capital adequacy ratio. You need to have enough deposits so that your entire loan book is only a percentage, right? Central banks monitor this KPI very closely. Now, one of the ways that fintechs can hurt the banking industry is by having such good user experiences that people would rather keep money with the fintechs than keep it with the banks. So they take out the deposits from this bank, give it to this other company, because they like how they can invest and how the custody is handled and how they can spend. And this weakens the financial fundamentals of the institutional player. So if there's one area that I think incumbent banks need to be careful of, and this is like a dark horse, you can easily blindside a leader, right? You need to have excellent customer experience, whatever that means for your bank, right? People need to feel like they're not missing anything by not being a part of Revolut and Monzo. And that's not an easy thing to do. But the moment people start pulling their money out of your institutional bank, and despite the fact that they have a mortgage with you, you're not going to have deposits anymore. It's going to be really hard for you to continue lending. And eventually your bank will collapse in dramatic fashion. So I think that's one real threat for banks. But again, I think you have to look beyond the technology. Banks versus fintechs is not a technology question; it's a finance question, right?
I'm starting to doubt you're a banker. I'm starting to think you represent a fintech. But okay, jokes aside, let me tell you something. What I wanted to also ask you, was a follow-up question about how can this threat be overlooked, or how can this be worked upon? But just before I ask you that, I want to kind of weigh in from an absolute customer point of view, right? You said how banks would not do well if they continue to work old-fashioned, correct? From an absolute customer point of view, one thing that I feel the banks really, at this point, at least needs to stop doing is outsourcing your customer experience, right? Most banks I call, I've lived out of Dubai, I've lived out of India, different countries, right? No matter where I lived, I picked up the phone to call my bank for XYZ reasons. My call either landed in India or in Philippines, or some place where that person really will actually have no idea of my concern, right? Yes, they've been given good training, they're very good with their customer service, but if I'm really dealing with my money, I want to be secure. I want to be sure, that, okay, this person's going to be helping me in certain things, right? So that is my one bit to your previous answer. I was just adding and very much agreeing to what you said. Moving on, how can organizations, right, overcome, like how can banks overcome this situation and stop looking at fintechs as a threat? This morning, I did, while I was having this discussion with others, what we also discussed is, from where I see, right, last 4 years, successful edition of this particular summit, having done it in Ghana, now in Kenya, different parts of the world, speaking to almost about 1,000 plus C-suite executives, right? Because we're all talking digital banking now. We're all talking fintechs, digital transformation. We're talking emerging technologies like AI, ML, IoT, right? What I learned out of all the conversations that I've been having is collaboration would be a key, right? Collaborating with the right fintech, joining hands, developing good partnerships, right? Leveraging what they have and letting them leverage what you have. Because if you notice this very, very closely, because the banks have been running for decades now, like for example, the 3 top tier banks that we mentioned in Nigeria, right? Let's say UBA, Axis, or FBN also for that matter, been going for a really long time now. And why are they happy and very, very well done, and why are they at the top? Number one, the regulatory frameworks are really favorable to them, correct? Now, at the same time, if you notice, the regulatory frameworks in most countries are not very favorable to fintechs, simply because these are not licensed financial institutions. These come in as technology companies. And later, when the regulators realize that, okay, they're playing with people's finances, some organizations are, yes, they want it. They apply for licenses and get licenses and operate as a technology firm that deals with money as well, but some don't. So what do you think would be a workaround for a fintech to not look like a threat for a bank?
Really good question. And I like the example that you gave about the customer experience center, not outsourcing your call center. And I think it's related to what I said about, outsourcing your technology as well. I think banks need to decide what they're going to be, right? Now, the core of a bank has changed, right? And it continues to change. Things are always changing. 50 years ago, a bank would have had a lot of actuaries. A bank would have had a lot of people in the operations department to process transfers because it was so paper-based, right? In Rwanda, it's changing rapidly. I think these divisions are going to go extinct in the next 2 years for sure in Rwanda. But it is a metaphor for what's happening across the entire industry, right? And I think as these divisions go extinct, it now requires new teams, new divisions, new talents, right? So, okay, instead of the traditional actuary, now you need data scientists because you have so much money moving back and forth. You need to get insights from that, right? And you need to be good at that. Customer experience. If everyone has moved out of the branch and banking is moved to your phone, to your web browser, I mean, then you need people who can help them when they need the help. And like you said, maybe like now that you don't have a whole team of ops people, maybe you need a whole team of call center people, right? So I think that the structure of the bank is evolving, and I think banks need to be smart about that and decide how, what they're going to look like. Now, there isn't one way to do this. There are many different ways to do it. I think a bank can decide to be at the forefront, right? As a bank for consumers, and that's where you need to in-house your. Well, I think everyone needs to in-house technology, but that's where you need to in-house your customer experiences and a few other things. But you can decide that you want to be an infrastructure bank, right? And when I mean infrastructure, I mean technology infrastructure. And I think a good example of this is Goldman Sachs, right? Now, Goldman Sachs, historically, traditionally till today, they are an investment bank. But Goldman Sachs has one of the biggest technology teams of banks in the world, right? Goldman Sachs, they spun out a whole digital bank called Marcus, which is on literally the other side of the country, right? It's isolated from the traditional bank. They have engineers working on their trading teams, engineers working on just about every team in the bank. Like technology and banking for them has now become deeply intertwined. And there are so many different ways that they have become what's called a banking as a service bank. Apple issues credit cards now. Goldman Sachs is the one that's actually behind that, right? So it's an Apple credit card, but it's Goldman Sachs financing and capital, right? And Goldman Sachs only provided an API. Stripe and Shopify partnered so that when a merchant registers on the platform, if you didn't exist before, they can help you get registered, right? There's Stripe Atlas, which helps you get registered as a company. And now you're issued a bank account immediately on the platform without visiting a branch. That entire journey is powered by Goldman Sachs. So it becomes like an SME account on the Goldman Sachs platform, right? Credit, they're the ones that everything. So, and Goldman Sachs, they simply sit at the back. And what they've done is they've created such a robust and well-documented API framework that it's super easy for the biggest players and maybe some of the smaller players to do that integration, which gives them, gives them a niche, right? Apart from their traditional investment banking business. Now, one key thing is, of course, if you're going to do anything, you have to do it well. In this new world, where partners can choose who they integrate with, they can choose who their infrastructure partner is. Okay, today I want Goldman Sachs. Tomorrow I want, Mercury Bank out of Silicon Valley, right? Like,
yeah,
anyone, they can choose anyone. And I think this leads to my next point, which is banks have to be careful and they have to do what they do well, because in this new world where banks are no longer at the forefront, or where many banks cannot afford to do it because they didn't invest in talent like Revolut and Nubank, who I think are going to dominate across the value chain, right? If you're going to be a back-end bank, a banking as a service bank, you're at the risk of being commoditized. I'll give you an example. So we signed a partnership with the biggest telco, MTN, to do smartphone financing, right? So MTN and their partners, they are doing everything from credit scoring, right? MTN has data on just about every citizen in the country. And they're able to take over 200 different data points and turn that into a risk model across 8 different risk segments. And then they're able to decide who should get money and how much, right? And the only role that the bank plays then is dispersing capital because MTN doesn't have a banking license. So banks that used to have the customers, they used to have the data, that have the ability to disperse and collect. Now all of that is being done by other people. And the only piece left for us is the financing. Now, of course, at this bank, we have, I think we have the strongest technology team in the country, across my division, the Digital Factory, and the IT division, right? So
I can tell.
Few banks, thank you. Few banks can move as quickly as we do to do these integrations, these highly sophisticated integrations with companies like MTN. So we do have an advantage. But once other banks start catching up, what stops them from saying, okay, so we're doing lending with you, but we can also do it with this person. You're giving us a 30% profit share. These guys are giving us 20. And they pit you against each other. you go from 30 to 15 to 10, right? Over time, I think that's what happens. You commoditize this. And what ends up happening is that it no longer makes sense to have such a fragmented place where you have maybe 20 different banking as a service banks. Instead, because the margins have slimmed, instead of having maybe 20 banks, now you can only afford to have 3 or 5, right? And like what happened in Ghana, you had this massive consolidation, some banks shutting down. I think there could be another wave of shutdowns and consolidations in the future because of how this game is changing. Now, I don't think, in fact, I know that every fintech is not going to get a banking license because it's very difficult. And I'm sure that the regulators are also going to change their approach to maybe limit the number of licenses, right? Or make things more stringent so that you don't have every fintech just becoming a bank. Too many to regulate, difficult to oversee, etc. So I think things are going to change such that banks are going to have to find a niche. Either you're going to be one of the 3 to 5 infrastructure banking as a service banks that does it really well, or you need to invest heavily, maybe reinvent yourself so you can play in the space that Nubank and Revolut and Monzo are going to play in. You know, because their services are going to be so sophisticated. I mean, Monzo now, and this is very simple. You no longer need to use or send a travel notice for your card. Bank of America still requires that. Revolut and Monzo just record your location on the app immediately.
Yes.
You don't need to say anything. You know, and they have all this machine learning and AI. It's like banking that anticipates your needs.
Yeah, they've integrated technology so well.
So well. There are banks and financial services groups in South Africa. They know you to such detail. They know how well you drive, and based on how good your driving is, they can reduce your insurance premiums, right? Or they can recommend car loans,
a better plan, yeah.
and then tweak your interest rate. I mean, these are difficult things to achieve, absolutely difficult, and it would be silly to expect every bank to make that transition. We just don't have enough talent in the world, right? But of course, banks with forward-thinking leadership can position themselves in this new world to succeed.
Spoken like a true valedictorian, I must say. Yeah, I did a little bit of reading about you, and I know that you graduated valedictorian, and things changed when you came back one summer to Nigeria. Yeah.
Yes, that's right.
That's a beautiful article. In fact, I was like really taken aback when I was reading it, because this is truly what is called giving back to the community. Yeah, and
yes.
Coming back to okay. Now, interestingly enough, when you were talking about Goldman Sachs, what it also reminded me is, initially banks actually thought that, what are these fintechs going to do? We're doing well, we're the leaders. We're going to sit back. We're going to enjoy the popcorn we made in the last 20 years. But do you remember that particular incident where JP Morgan, right, said, what is Bitcoin? What is cryptocurrency? And, how does it matter? And a year later, I think JP Morgan led was in the forefront of cryptocurrency is very important. We need to make sure that, we're doing it. So do you think it's going to be too late for all the banks to actually realize that technology is the driving force and nothing but technology?
I don't. Again, I think it depends on the bank. I think some banks will make that transition. I think crypto is an interesting conversation. That's a different one altogether.
Yeah.
And I think crypto has the potential to literally change to move the tectonic plates. It can change everything.
This conversation with you and yes. I'm having a feeling that we're first of all not going to stick to time, but we'll try and conclude in the next 5 minutes. However, please try to make sure that this is not the last conversation you and I are having. We have the 5th annual and the 6th annual happening this year itself, and we're definitely catching up. And I want you to add value and take back from the different experts that are coming from across the globe. Now, moving on really quick, I think I've got one more question that I made a note of. Now, the changing banking, the banking landscape that has been seen so much changing, seen a rise in digital-only banks, Revolut, Monzo, fintechs offering streamlined banking solutions. Neobanks have fully embraced the power of digital branchless banking to offer a seamless banking experience with little to absolute no fees, right? these pose significant competition for traditional banks. And at the same time, traditional banks are still charging you a certain fee on a certain transaction. What do you think incumbent banks, should do to keep up?
Yeah. So, I mean, besides improving their customer experiences and investing in talent, around pricing, I think banks have an advantage, right? Where fintechs don't have an asset base and interest income that's coming in every month, right? So they must charge. Banks, on the other hand, because they have interest income, they can afford to maybe zero rate some of these services, and that can attract a certain segment of the population, which then provides them with deposits, which helps them enhance their lending business. So I think banks they need to lean into their strength. They need to first understand the world that is and the world that is coming, and then leverage their strengths to give themselves a competitive and comparative advantage. And I think one of those things is the fact that their income comes from a very different place, and they have the money to invest in the capacity and then use that capacity to provide the same services that these startups, these newer companies are charging for, and maybe burning all the money they raise to provide, right? Because if you're providing these things for free, the backend probably isn't free. So you're probably burning money to acquire customers, which is not a sustainable model. But banks, they have the money, they have the customers, and they have the income. So they can do that same thing. They can play that game better than the fintechs.
Well, thank you so much. Obinna, I must tell you, this for me, honestly has been the highlight of the day. All right. Thank you so much. Because this more than a fireside chat. It was like two people that are really concerned about a certain industry are, doing things or speaking about things that can change the world, right? And on my way back from Ghana, definitely making a stopover in Rwanda to personally catch up with you. Come to Bank of Kigali, sit down, we continue this discussion further. However, I must tell you, did you know we are also the summit Connected Banking also hosts Innovation and Excellence Awards?
I did not know that.
Okay, so we also are the hosts and organizers of Innovation and Excellence Awards. That happens every year with jury selection coming from across 17 different central banks. And just so you know, please, if possible, stand up and clap for yourself. Your bank this morning won the award for the best use of tech for banking.
Wow,
best use of
amazing.
Technology for banking. And honestly, congratulations on winning the award. We will be notifying now that I have you with me. I'm notifying you. However, best use of technology for banking generally is attributed to the person that is driving technology in the institution, which for me is you at Bank of Kigali right now. So congratulations to you personally as well for doing what you've done. Like that article read, you could have chosen the Stanfords and the Columbias and the Dukes, but here you are sitting at Bank of Kigali, and the recent results, the bank reported, I think it earned RWF 28.3 billion in the first half of this year, which is equivalent to the increase of 24% compared to 24.5% compared to the last year, right?
Yes,
so that clearly, says that there is some development happening, right? And if this is a very good case study, and you have a success story that you can share with, so that others can learn. And once again, congratulations. Thank you so much for joining us. I would like to ask you, should you have any conclusion remarks?
No, I think look, this industry, this space is super exciting. I look forward to working in it in a long time, and I think banking leaders should embrace the change, be open-minded. There's always a path forward. I think your bank doesn't have to wither, as this new world kind of meets us where we are. I think there are so many different ways to make sure your bank remains relevant and perhaps even thrives in this new world. So yeah, I just encourage all banking leaders to stay encouraged and keep an open mind.
Thank you so much, Obinna. I think get out of Rwanda as much as possible. Meet the leaders across the continent. There are a lot of CDOs, CIOs, CISOs, and CEOs of different banks across East, West, and South Africa that are like-minded people, right? Who are actually driving the agenda of digital transformation to be in the forefront. And Africa today is the fintech hub of the world. So clearly, there is a lot of things that you guys are doing is very, very correct. So thank you so much for joining us. Thank you for amazing inputs. I will look forward to see you and host you very, very soon. Congratulations once again on winning the Best Use of Technology for Banking Award of the Year.
Thank you very much, Mohammed. It's been a pleasure.
Thank you. Have a lovely evening.
All right. You too. Bye-bye.